Hey traders, John Howell here. Let's get ready for this week for the market. It's going to be looking at obviously the stock market, or gold, silver, the mining sector, giving you a bit of a technical analysis across that. Also, I want to share something with you when it comes to the yield curve and the inflation rates. I've been looking at something I think is going to be really interesting. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. All right, traders, before I do start, make sure you grab this this Master Trader bundle that I'm actually doing right now for $4. You can see all the details here. I'll talk more about that a bit later on, but if you want to get access to it, just go to johnsflashsale.com or very first link in the description, only for $4 there for that Master Trader bundle. So let's actually get into the actual markets itself, and a bit of a technical analysis here, and to get us ready for the week. And then we're going to be looking at some of the yield curve stuff, because that's really, wait till I show you that. So let's actually bring up one of the things that I really like to do when I'm looking at the markets is I always like to look at a chart that is pretty, like, I look, there's a what do we have here? We have lines, we have volume, we also have moving averages, we have a lot of stuff here, right? So this actually it is giving me a bit of a good look here firstly. But first, what I like to start to, what I'm always like to do is I always like to bring it back to just a blank chart first, okay? And blank chart, yes, we have volume down here, but I'm not even looking at volume right now. And the reason why is because it's not the indicators that's the most important thing to us as traders. It's actually the market, right? It's the trend analysis. It's who's in control. It's where are we within different phases. And so right now, for me personally, what I'm doing here is, if I'm going to bring this up here, okay, if I'm going to bring the S&P 500 up here, and I can see, okay, so what's happening here with the S&P 500 on a daily chart? And I can see here that we have a high, we have a movement down, back up, major, lower, high, movement down. So we are still in an overall downward trend, right? So we did get a bit of a high here. And then we've actually broken that sort of high through there. But are we about to break a significant high? This is that last significant high. Notice how we get small little lower highs, right? So to me, small little lower highs are like, see here, we have a little rip up and then a little rip up, and then we have this move through here, and then we have these little small ones through here. Like, notice they're the small ones, right? The big ones are like, here's the major low, here's the major high, here's the major low, major high, major low, right? It's like a wave. If you look at it from a wave perspective, right? We have a wave up, wave down, wave up, wave down, wave up. If you have a look at it from that, see how it's like a wave, right? And then we come back to the wave down, wave up, wave down, and now we're just really on an overall wave up. See how that looks so much more clearer now, right? To identify, oh yeah, now I can see, oh, and there's that last high, and then we have the low through here. So you can see, look at this here, right? We have a low, higher low, and then we started developing what? These sort of equal highs through here, and then we had a low, a lower low, and now we're developing this lower high. So we still could be getting this lower high through here. So that's the first thing I'm looking at there. Whenever I look at, and also when I'm looking at the weekly charts, I'm always looking at where is the current trend right now on the weekly charts, because the current trend on the weekly chart is really really important to us as well too, right? So we can see here that we've had a move up, and this is where weekly charts are really important, because a lot of people don't look at weekly charts when they're trading the markets, and there's something that they miss, right? So we have a high, we have a lower high, we have a little lower high here as well too, and as you can see, right, we just had a little bit of a pullback. So a lot of the times when we get this overall pullback on the weekly chart, we start to get that sort of small little gyrations on the weekly charts, or on the daily chart, sorry. You could see here, this is the weekly chart now, and all we're doing is just getting a pullback. And as you can see, even when we're in the bull market, the flip side is true. As you can see, every time we got these pullbacks through here, or a pullback through there, or pullback through there, or pullback through there, a lot of people thinking, oh, the top's in, or the top's in, you know, the top's in, right? As in, like, the market's going to start to roll over. And as you can see, high, low, high, low, high, low. That's where, and then as you can see here, right, we had a little pullback and then a rip higher. And then guess what? Then we started to develop what? See, now we're starting to develop this sort of action. So we still could be getting something like that when it comes to the stock market. So this overall move up, to me, what I'm looking at here is indeed what I'm looking at is from this move here to here to here to there, right? So I'm looking at it from an overall perspective, from there to there to there to there, there, as you can see, right? And then we have these a few small ones through there, as you can see, right? So we have that'll be like something that I'll be looking at through there. So when I'm trying to get a good grasp of what's going on right now, I can say, okay, while the buyers may be coming in through here, and we may start to develop this low and a bit of a higher low through here, right? There still may be an overall momentum on the downside. We still could be getting ready for another one big last crack in the markets, and we need to be aware of that. Now, the technical analysis side of what I've just said there on a short-term basis is if I bring up my trend lines, there's actually a few lines here. There's actually this one line here that I'm noticing on the S&P 500, right? So notice this 3,900 level. Okay, so there's a few things here. 3,900 level. We have all this support level. Okay, so we have all this sort of support level right here. It became resistance, and then it became resistance again. Now look what's happened through here, right? It's broken back above it, and we're now at this sort of bit of a bear flag formation, right? There's that flag formation through there, and now we're at the top level. So if the danger would be if we actually start to break actually below this sort of level through here. So the first thing I'll be watching for is, do we actually start to get back below here? Because if we do, then we're probably going to start to make our way back down towards the bottom of the flag. And if we do then something like that, and then we start to break out like that, then if we get something like this, then we're probably going to be heading down to about 3,500, maybe even around that sort of 3,400 level is where I see it going from there. And so if you look at that through there, if you just look at it from a flagpole perspective, that'll be the last move down, and then you project that out from there to there, right? And then you get somewhere actually around, it's actually a bit lower than that, isn't it? Yeah, around that 3,200 level, somewhere around there. So if we do start to break out from there to there, you can see it's actually probably around that 3,200, 3,300 level. So that's the thing. That's the level that I'm looking at right now when it comes to the S&P 500 of what we're looking at through there. Move over now through to the Dow Jones, and we're getting a very similar situation, right? So if I look at this level through here, the exact same analysis applies to the S&P as I walk through, so I'm not going to go over the exact same thing again. But looking at the highs and lows and the trend analysis, but looking at the S&P 500, we can see that we have this level through here, right? So this is the Dow Jones, and that's that major level there, right? So on the short-term level, yes, we have a bit of a bear flag, as you can see where my line is drawn in here. But look what's happening here as well too, right? We're getting the same thing. Support levels, a lot of resistance, and now we've actually broken back up. So we're broken back up, and yes, we're at this bear flag formation, as you can see. So the danger for this here is that what actually happens here next, because we actually found a lot of, as you can see, we actually rejected it here, and then we actually found resistance here, We even rejected it here, and then we broke back above. So that whole level through there is definitely a strong level there, right? So if we start to break back below here, like something like that, then there's a good possibility we're going to get something like this, and then maybe we break to the downside like that on the Dow Jones. Move over now through to the Nasdaq. If I'm looking at the short-term analysis on the Nasdaq, it's not exactly the same when it comes to the horizontal level, right? Because we definitely did have, it's probably an area, I would say, because the last area that had a lot of sort of strong support was around that area through there. I'll scroll back a bit more. So if I bring my charts up to there, that's actually probably a pretty strong area back here on you can see back in 2020 we had a lot of resistance through there, and then it broke back up, and then coming back down you can see it actually rejected it through there. We found a lot of support through there as well, and then we actually broke down, and then that's when we actually started seeing the free fall. And now we're actually pretty much right at that level now. We're actually sort of a double whammy right now, right? So we're actually at, let me actually bring that up just a little bit more so you can see we go to, and then what I'm looking at here, traders, is I'm looking at to get, I'm letting the market tell me what's going on, right? So I'm getting the market to tell me not where I want to draw the trend lines, but where is the market respecting it the most. And I can see how it actually rejected it through there, and then it had a lot of support through there. We broke back below, and we're actually at that level now there twice. Right, so if I just make that a lot thicker from there to there, all right, and then you can see how I just create the parallel trend line again, and actually you can see that's that sort of a flag formation through there. So the Nasdaq is definitely at it's a very slow grind to the upside. The danger of where we are right now is that if we start to break below this sort of flag formation or this channel formation, the major support level I have, and if I go back to my weekly charts now on the Nasdaq, then that major support level is somewhere around about that 10,000 level through there. If I draw some longer term trend lines, some real long term trend lines, if this did turn into some sort of a really big significant move, you would expect a lot of support around. See how that longer support level from that 2009. If we did start to really have if we really started to create a waterfall effect, and this was a much more of a big pullback than just that 10,000, which is that last resistance back here, then you'd probably see that sort of that level through there, and that last level. And as you can see, right, I'm just drawing the major highs and the major low points through there. So I would say if we did start to get a waterfall effect, that the major levels would be around that sort of 7 to sort of 9,000 level is probably where you're going to find some significant support level through there. So you can see we had a very, very big move up. Now we get this move down. You can see here we came down on the weekly chart, ripped down, lower high, ripped down. There could be another lower high here soon, and then we roll back over. So while the daily charts are possibly showing a bit of a supporting level on possibly finding a bottom, as you can see, we're not getting that sort of action. And this is where the weekly chart can really sort of, you've got to really watch this weekly chart or what's happening here, because we could just be developing, because the market goes through phases, right? We go through a moving phase, and then we go through a resting phase. We go through a moving phase, we go through a resting phase, moving phase, resting phase, moving phase. And then that's in an upward trend. And then the flip side on the bear market, right? Moving phase in a bear market is down. Then a resting phase, a moving phase. We could be just going through a resting phase before we go through another moving phase, right? So they're the different phases there that we're actually looking at there on the Nasdaq. And the benefit of this, traders, is that I don't want you to be worried about a market crash or that whole terminology, right? Market crash. I don't want you to be worried about that, because it's like there's so many opportunities, right? You can short the market, you can buy put options, right? There's a lot of opportunities out there to do really well in a bear market. So if we are going to create a bit of a waterfall effect, then it's important just to keep an eye on for that, because you can still do, obviously, you can make a lot of money if you watch the big short. There's so much money to be made in a severe downturn or a severe market on that, if you just know what to look for. In fact, and I'm going to plug actually that Master Trader bundle here for a minute. If you're wondering and know what to look for and so on and so forth, even if you just watch this video number 1 in the Master Trader bundle at johnsflashsale.com, this technique here has been working since the 1950s, and so you'll be able to get a really good understanding of just even this one technique here will help you when it comes to trading bear markets and stuff like that. Bit of an extra plug for that $4 course that I'm doing right now. So let's go look at the Russell, and then we'll look at then we're going to get onto the other stuff, which is the mining sector, the yield curve, inflation rates, etc. So looking at the Russell definitely did have this major support level back here, as you can see, around that 109. Now I'm looking at the IWM, which is the ETF for the Russell. There's a few interesting things that I'm noticing here on the Russell. The first thing is that this major trend line coming down through, notice we're getting very, very, very close to that level through there. So it's a bit of a do or die right now for the Russell. So that's the first thing I'm looking for. I'm noticing. The second thing is that once again, if I just let's actually just make that a lot thicker, and then I'll create a parallel trend line right from there to there. And as you can see, right, that's that level through there that we have been in now, which is just this channel through here. So that'll be that level through there. But if I bring my, I'm going to bring my trend line down. There wasn't a lot of, let me just scroll back through here. So I'm trying to see that, okay, so I'm just trying to look at the recent price action. Where was it supporting it? Where was it resisting at it? So we had a bounce through there, resistance through there, a little support through there. But I can see the last sort of level is probably through there. That'll be the level through there. And the reason why I did that, you could do it up through there, but I'm looking at the recent price action to see where it's finding support or resistance. And I can see on the recent price action, this level through here and this level through here, that's that 175 level on the Russell is definitely indeed a strong area of resistance through there. So it's going to be, once again, it's going to be a really a bit of a supporting level. So we may even come down and find a bit of a bounce initially, but if we start to get something like this and then we break out, we've actually broken two things, right? We've broken a major support level. If you think this from a psychology perspective, we've broken the 175 level. If we do get this on the Russell, so if we do get the breaking of the 175, then that's showing weakness. Then if we start to break back below here on the on out of this bear flag formation, this breaking below this 170, then that's now two levels of complete weakness, and then we're probably going to start to see something like this coming out of the markets, right? And then if I look back on this black line, which is that 175 level, I can definitely see that we also found a lot of support. Notice how we actually had a lot of wicks, right? So the close, this is the close here, the close here. If you don't know, this is the open, and this is the low, that's the high, and that little thing on the right there, that's the close, if you're not sure where the close is, right? So you can see here that on these levels through here, we opened there, we rallied down, came back up, closed there. Opened there, rallied down, came back up, closed there. We opened there, came back up and closed. So notice how there was a few times we actually broke back below it, but guess what? We actually didn't close below it, right? So that whole level there was a massive supporting level, and then the market took off. Then when it broke, now we're finding massive resistance levels. So if we do end up starting getting this situation in the market, then it's going to tell us that we're getting they're probably likely to get a bit of a free fall in the markets through there. Let's go have a look at gold right now on a bit of a technical analysis basis to see what's going on. And I can see that, yeah, so the first level of what I'm seeing through here is we definitely are at sort of a few levels of X marks the spot with gold. So gold, I've got this major long-term trend line down through here back in 2018 into 2019. And then that's where we're at right now, this longer term level here. Then we also have this sort of a lot of support level through here. These support levels around that 1,700 level that happened in last year. And then so that we're actually at that level there right now. Plus also we've got a bit of a supportive sort of channel coming down through here. So we've got sort of three levels of support. And so I wouldn't be too surprised to see a bit of a balance in gold. But we're not out of the woodwork yet because we are still, remember, the main thing is we can draw a lot of trend lines to find, oh, well, gold's got to find a bottom, now we're going to start to rally. And that's not necessarily true, right? Because if we have a down, up, down, we could just be getting up before we get another down there. That's always the danger, right? So we've got to not throw our thoughts, throw our emotions, throw our feelings at the window. It's like, then, well, we're in a downward trend. If we do get a bit of a pullback, it could be just a pullback it could just be one of these again before we see one of these again. So that's what I'm looking at there when it comes to gold. And then silver itself as well too. Silver is actually holding. There's actually a major level here where we are right now when it comes to silver, and that's that level there around that $19 level on silver. And you can see how we've been in this sort of tight channel through here. So if silver does continue to go sideways, and this is actually going to be possibly a good trading setup for me, because I'm looking at this from that perspective there. So we find this, I'm just drawing that level because that's where the market's actually finding a lot of support at this current time. If silver does what I would like for silver to do is if silver does something like this, and then we get a breakdown like that, then we're probably going to get a bit of a free fall in silver through there, right? And then we're probably going to see silver back down to, and I know this is going to, on a technical level there traders, we're probably going to see silver back down towards the 16, maybe even, possibly even around the $15 level. I know that's actually pretty, yeah, as you can see that through there, right? So that's what we're seeing through there when it comes to the silver market. On through to the gold mining sector. And the gold mining stocks, as you can see here, look what's happening. We're actually at this top of this channel, but we're hugging it. If we break down, look where we are to the next bottom of this trend line here. So we could be getting ready for, and okay, I'm in an iron right now, is because there's two levels in my mind. Yesterday I did a video of 3 reasons why gold and gold mining stocks are going to be the greatest investment this decade, right? That is for the rest of this decade. On a short-term technical level, that's what I'm about to say here right now, okay? Because if some of you guys, but John, you said yesterday it was the greatest opportunity, the greatest investment opportunity. Yes, it's an investment opportunity. What is an investment opportunity? Oh, well, you buy and you hold for 10 years, right? And it goes down, it goes up, and fluctuates in price. But then you come in 8 years later, and then you see that where it is, okay? So that's that longer term perspective. Longer term, you're not trying to pick the next few months, next 6 months. But come back 5 years from now, 8 years from now, you're like, look at that. There we go, okay? So there's different levels. There's an investing mentality where you're buying, you're not really caring about the fluctuations. It goes down 10%, 20%, 30%, you know, you're not really caring about the fluctuations. On a trading basis, which I do both, that's what we're looking at here from a technical level. That's what we're seeing through here. So if we get a drop, we could see hugging. So if we do get a drop down, then we could actually see the GDX actually go through another free fall. And as you can see, even just recently, it actually sort of, it stopped right at that resistance level. Now it's holding through there. So that's what I'm seeing through there. If I bring up the big picture on the GDX, okay, so that's actually that, we're right at that major level through here. That's where it's actually finding a lot of, you can see how it's actually finding a lot of sort of a support level through there. And that's where we're at right now. Yeah, and the next level is possibly down through that level there. So if we don't start to break back up and start to create a bit of a pullback out of this here, then we can see possibly still the GDX possibly heading back down towards that sort of $24 level through there. If we're looking at the GDXJ, which is this is one of my favies. Favies as I like this for a longer term opportunity, or the gold mining sector anyway. But if I look at this one here, you can see how that, once again, we try to break up, didn't we? We try to break up and then we actually broke back down. So if I'm looking at this from a longer term perspective, we're actually right at that level through there. So yeah, even though we may get a bit of a push down through here, if we do get one last push down on this GDX, we've actually notice how we've been going down for quite some time. This is always a big danger, because whenever we move in a direction, as you can see, we're going down. What do we get? We end up getting a pullback. Down. So if we get a little push up and then we get another push down, it's probably going to be a fake out move, meaning it's probably going to go down a little bit, and then it's probably going to go through possibly a pullback, or maybe even a V bottom formation. So looking at the GDX through the GDXJ through there, that's actually where, even if we did get a bit of a downside move, we're possibly only going to get that movement from there, that level through there. So we may even only have, another 10 or so % on the downside. So if we do get another move down, it's probably only going to be around about there, real small little crack, and then maybe, and then I see a strong bounce coming out of that sector through there, because we've already been coming down for quite some time. So that's what I'm noticing through that level there. Now, I did want to cover something on the interest rate basis. I see that the interest rates where we are right now, definitely creating a bit of a really ugly yield curve, right? We've got the sort of the 1 year through to the and that's that you always hear about the 2 to 10 year spread, right? So the 2 year is the 2 year is 2.97, and then the 10 year is at 2.75. So we're getting a definitely inverted curve through there. We're getting this 20 year a bit higher, and we're getting the 30 year a bit higher through here. So here's what I see happening with the interest rates. They're probably going to jack up interest rates again coming real soon, right? I think it's coming. I think there's another Fed announcement coming up. I think it's this week, isn't it? Maybe this week, yeah. So they're probably going to jack up interest rates even more, right? And if they right now they're at 2.15. They're probably going to jack it up even more. Then what happens is that as this thing gets jacked up through here, right, we may go through another half point or whatever. As this thing gets jacked up, because what the Fed's looking at is this right now. This here right now as we speak, right? So we're looking at the inflation rates, and they're like, oh my goodness, the inflation rate is so high, it's so high, it's so high. Okay, cool. We all know that. So if the inflation rate is so high, then we can see that that's what's going on through there. So we're seeing the inflation rate high. So they're going to probably keep jacking up this here to try to keep the inflation rate down, all right? So when we look at that, from that perspective, when we look at the Fed funds rate, this is the Fed fund rate here, right? It's about that. What's that? They're about 1.75. So if they do another half point, that's going to bring us very, very, very close to where we were. This probably must be this actually may be the very last time we actually get a rate hike. Looking at what we're seeing right now, and hear me out here for a minute, okay? So we may get, this may be the very last rate hike, because if we actually get if they do another 0.5%, we're actually very, 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 very close to where we are in the past, right? Over through here, that's where they had to start jacking it down. So if we get another rate rise to say 2.25, okay? So if they do a 75 base point. That's going to give us up to, so half point will give us 2 point, actually, where is it? So 1.75 to, yeah. So we could actually start to end up around we may get around to the 2.25 or the 2.5. If they do a 75 basis point hike, that's going to put us up to 2.5 there. If they did do that, then let's go look at a few things here. Let's go look at the actual interest rate here. So if the Fed funds rate does start to, if they jack it up, say they do a 75 basis point, and they get us to 2.5%. All right, we've already looked at the yield curve from here, and we can see the yield curve where we are here. So if they do that, they jack it up, that's going to put us at, say, at 2.5% on the short end there, right? On the short end there. But then but if that's at 2, what I've been saying and what I've been seeing is that on the long end, this interest rate here, I actually see. So if the Fed does rate, I'm going to put a line here. So if the Fed does jack it up to 2.5%, that's 2.5% there. Okay, that's going to be the Fed funds rate. Now we're looking at what? We're looking at the 10-year. So if the 10-year continues to then drop down on the Fed, so the 2-year is already up, right? If we look at the 2-year, the 2-year is what? The 2-year is 2.97, and it's actually rolling over already. You know, I've been saying this. So this lower high here, and then now we're probably going to break this low, and I've been saying this the entire time, as you guys know, that the interest rates are going to start to pull back, and this is exactly what's been happening now. So we're probably going to break that. We're probably going to continue down there. But if we look at the 10-year, if they do jack it up to, you know, they get it up to 2.5%, that's the Fed funds rate. But the 10-year continues to pull back. Now we've got the Fed funds rate high, and we've got the 10-year then possibly down here around the low 2s. That's going to create problems, right? Let's go to the 30-year. Same thing for the 30-year. I'm going to create a trend line, another trend line here. Actually, let me just change this color so we can, let's just make it this color here. So let's bring this down to 2.5%. So that'll be the Fed's funds rate through there, right? That'll be the Fed's funds rate on the 30-year on the Fed's fund rate. But then the 30-year is up here. So what happens as this continues to come down towards this low level through here? Now we start to create a bit of problems, because I actually see this thing possibly coming back down to these over that sort of 2,200 level, right? So I actually see it I see the interest rates possibly coming back down to this longer term trend line, pulling back, and actually that's where the Fed funds rate is. If I look at the 10-year, same sort of thing, right? I actually see the 10-year pulling back towards this longer term level through here. So that's going to create a lot of issues when it comes to the markets here. Now, issues as this is happening, I believe we're going to get one last big push in the stock market, and then we're going to see possibly the big recession come in. I believe this pulling back of interest rates is going to give the market one last push to the upside, and we're going to see one last rally to the upside. And it's going to be pretty big, right? And the rally may last 6 to 12 months, right? So I wouldn't be too surprised if we don't go into if we're not in recessions now, but we're teetering on that, right? We're teetering and teetering and teetering and teetering on that. So we may be not, but this movement down on the interest rates is going to create a bit of a floor under the markets. And I do see, if we're looking at the inflation rate, and let's look at the last. People always talk about the inflation rate. Something that I know about just looking at this from a non-emotional perspective is that every time we get a spike, the market's the inflation rate is just not going to keep doing that to 20%. It's going to be all over. Oh my goodness, we're going to die. No, okay, let's actually bring it back to a simple analysis of what the market is actually telling us, right? So we actually have, every time we get vertical spikes, what inevitably happens? Vertical spike, movement down. Vertical spike, movement down. Vertical spike, movement down. Vertical spike in the 70s, movement down. Vertical spike in the second half of the 70s, then a movement down. We've got a vertical spike now. So, and what's inevitably going to happen, right? We're going to inevitably we may get even just a little bit more upside, and then guess what? Then we're going to have a movement down, and then we're probably going to go through that again. But just remember, what's going to create this again? When the Fed comes out and they do that thing called QE, right? Why is this happening? It's because they actually started to print. This time was different, right? This time was different. Actually, then they started putting money into people's pockets, right? Instead of just putting it into the system and then letting the money filter through the system, it's now was just really people. Governments just started sending money out to everyone. You wait till you see the next one, right? The next one's going to be raining money from the skies, as Mike Maloney says. So the helicopter money is going to become much bigger than it was back this time. So if this is the result, if this here was the result of what happened in the vid situation, so you saw what happened in the vid situation when they did the printing of money in the vid situation. Guess what? You saw what happened with the asset prices. You saw what happened with the inflation rate. You saw what happened, okay? So when this does start to pull back over the next few years, and they come back out and they do a much, much bigger atomic bomb into the markets, and they do the exact same thing, what do you think is coming? Right? The exact same thing. So if you want to add an extra few zeros to your account, get ready, because over the next few years, it may not be now, right? It may be 24, 25 period that we end up going through that shake and bake period, right? Which is mean the recession, and then they do the one last big pump. That whole great reset. I don't believe that's coming now. I believe that whole great reset and the digital dollar and all this sort of stuff, one, I believe is actually going to be a good thing. It's short term, it's going to be painful, a few years maybe, but then on the long term, it's going to be amazing, right? It's actually not. So don't be afraid of, it's so bad, the great reset. It's like, no, it's going to be good. It's going to be good, right? Look at all the new inventions. Look, like right now, look at the internet. Just 20 years ago, people were like, I'm not going to go on the internet. What's that thing? No, and then everyone's on the internet, right? So it's going to be amazing, right? The future is amazing for us. But initially, we're going to go through that pain period, right? That transition period, and then a lot of things are going to be amazing because of AI, because of the electric cars, because of could you imagine where our lives going to be in 100 years from now? Like, look at the last 100 years and where 100 years from now. Everything's going to be amazing. But on the short term, how we're going to add an extra few zeros is is definitely when the recession does come, and it may not be for another few years. I may be wrong on that one, but when it does come and they start to do another big round of QE, then get ready for that, because you know what's going to happen, right? When they put atomic bomb in the system, reflation is going to happen, and that's going to be that one last time to really start to add an extra few zeros to your account. Hope you enjoyed today's market update there, traders. Make sure you grab that Master Trader bundle. In video number 1, you get the number 1 chart reading and trading technique that's been working since the 1950s. Video number 2 is about the chart trading boundaries that shows you the best and worst time to place a trade. Video number 3 is all about price and time phases, so you can understand what's going on right now and what's to come. Video number 4 is about price and time and going deep and advanced into that technique there, and that's actually amazing. Video number 5 is about a powerful chart reading strategies. That's an hour and 20-minute full deep training on the best trading techniques on the planet. Then there's a bonus here, my number 1 trading system for short-term and my short-term income system, access to a live event, and you can see there's actually John's flash sale. And actually, this is actually some of the slides that I've been utilizing for some of that training there. So if you want to get access to that there, guys, make sure you head on down to johnsflashsale.com, or this should be very first link in the description, and I'll see you in the next video.